Hi, everyone. Welcome to the Future of Finance podcast, where we break down investment strategies to help you live a better financial future. I'm your host, Marissa Wood, one of the owners of Union Financial Services and financial advisor. And today I'm joined by my business partner, Lisa Greene. And together we're going to discuss some investment strategies through the lens of baseball. And if you enjoyed our past fantasy football episode, you're also going to love this one. But before we get started, I'd ask you to please subscribe if you're watching on YouTube or your favorite podcasting app. It really does help us. So welcome, Lisa.
Always great to be here, especially talking about sports and finance.
I know, that seems to be our go-to. What brings us so much joy in life.
We got such positive feedback, as you said, about the fantasy football, that, hey, it's baseball season. Let's give it a try. Mm-hmm. Let's go.
Yeah, and I mean, when we were talking about baseball through a financial perspective, you had started listing off all the baseball phrases and wording, and oh my gosh, there's so many terms in baseball.
It is a world in of itself.
Yeah.
There are at least, off the top of any list, at least 150 slang words, jargons, phrases, terminology with baseball. It's so funny that when you start digging into it, that's when we started saying, well, we can compare these terms with some financial terms and some investment terms. So that's one of the reasons we're going to do this. This is to help people that maybe find finances, whether it's intimidating or boring or just tedious over and over again. We want to just do something fun and maybe resonate with some people that are sports fans.
Yeah, and I mean, if you understand baseball, you actually might understand finance and you just don't know it yet, but we're going to shed some light on that today. So with baseball, of course, it's all about rounding the bases and getting home safe. And I think that's our job as well as that general manager, to help the client through each life phase, which could be each base, and then get them to that end goal safely.
Makes sense.
So we want to start off this episode by starting out the way the season starts in baseball, and that's spring training. And it's something we love here in the Tampa Bay area too, because there's so many spring training facilities that we can go to watch with family. And it really is fun because it's less serious than a regular season game. And we want to remind you that, of course, with spring training and baseball, you don't win the World Series in March when the season starts. That's when we lay the foundation, start practicing, start finding out what works, what doesn't, making some changes before the real season starts. And so it really is about that consistency and patience with both finance and starting the season in baseball.
That's right. It's practice in baseball, and it is consistency in finance. We always talk about having that slow and steady, good plan to lean on. So baseball teams, this is when spring training is when they start planning on how they're going to go through the season. So we talk about home run hitting sometimes and hitting singles. And how can that compare to finance? Well, the home run hitter is always going to be, say, the big stock that gives great returns. Now, home run hitters also strike out a lot. So we want to have that nice combination of those exciting home run hitting stocks versus some nice, steady singles, because singles do win games a lot.
What would you say the singles would be? Like index funds, index annuities, something with slow and steady returns?
Slow and steady returns, some safe type investments. Those singles will get you to round those bases, and then you'll have that every now and then there's going to be that NVIDIA or that home run hitting stock that just hits the ball out of the park.
Yeah, it's once again that diversification on a team with different types of batters, and then also with your financial plan. That's a really good analogy, and it's simple to understand, I think.
I hope so.
Yeah.
One of the other phrases is finding that gap when you're hitting. Okay, it's our job. There's
What do you
that
mean
gap.
by finding the gap?
Okay, so when a hitter comes up to the plate, you want to be able to hit the ball where he can make a run. He can get a single. Okay,
So in between two outfielders or in between the infielders.
Right. We don't want to be hitting directly at, the center fielder because it's going to be caught.
Yeah, true.
So finding that gap in investments or hitting that gap, there's plans that can have some guaranteed income. That is hitting that gap. That is filling that gap with guaranteed income. And, you may need some additional funds that maybe your pension or your 401k is not providing we're talking a little bit down the road in retirement. So you need to fill that gap. You need to find the gap. Our job to find the gap for our clients and fill that gap.
Yeah, and that's, I think, one of the best parts of our job and most rewarding is because it's all about having income in retirement. That's how you have a healthy, happy retirement. And so when we meet with a client and we go through what their expenses are, that's number one. What is your monthly expenses? Do you anticipate them going up? Is there going to be a major change in them? What can we absolutely count on that you're going to have to pay every month? There's no cutting it out.
Right.
And then what does the income look like from Social Security, pension? We're talking guaranteed income. And then say if there's a gap of $2,000 a month that we need to cover with additional income, well, that's our job to make that happen with the assets you have.
True. And that's sometimes ignored by clients. They don't want to know about, it is a gap, but I'm going to figure it out. You're not going to figure it out on your own, but there are tools and investments that can absolutely fill that gap, help you figure that out, and help you sustain that lifestyle that you want.
Yeah. So if you're listening to this and you're thinking, well, that would be a nice peace of mind for me to know that I have no gaps in retirement, and I'm not quite sure what my expenses and guaranteed income are going to be and if my assets will cover that, just head to our website, union-financial.com, click schedule a meeting. You can book a call with Lisa or I or an in-person meeting, and we can sit down with you and provide you our expense template and give you some ideas on if you're going to face a gap and how we could fix that. Always complimentary. It's just good knowledge to have. So I would recommend anyone wondering if they have that covered, just go to our website and let's have a conversation.
Great info.
Yeah.
Yeah. So another term in baseball is the sweet spot.
I don't think I know that one.
Now, the sweet spot is the location on the barrel of the bat. Okay, there's a location on the barrel of the bat that if that batter can hit that sweet spot, he's going to be pretty successful. And I like to think about the sweet spot in investing by having that perfect balance of protection, growth, and income. That is the sweet spot. That is where we want to be able to hit some balls. Protection, growth, and income. Sounds pretty happy, right?
Yeah, I would say so.
Sweet spot.
Yeah, I would say so.
Yeah.
So those are some of the good parts about baseball, finding the gap, hitting the sweet spot on the barrel. But let's talk about some errors, because errors do happen in every game. And unfortunately, with an error, it does follow the player, not only through that game and the season, but honestly, their entire career.
Those errors, they don't go away. So let's talk about some errors that people do make in their financial decisions in life. What's the biggest error that people make?
I mean, the standout one that comes to mind first would be withdrawing from a retirement account before age 59 and a half. And it's an error for multiple reasons. The first one, of course, is they're getting hit with that early withdrawal penalty of 10%. And that is a government penalty that happens anytime you withdraw before 59 and a half. Plus, they're getting taxed on that money, which could, change their tax brackets that year or just cause them to lose some of that account due to taxes and penalties. And then probably the worst of all is that once that money is out of that investment account, it no longer is in there earning and compounding for their future. Had they just left it alone, it would have compounded and snowballed. And then it's too late to pay it back 10 years from then. You lost all those years of earning.
Talk about an error that will follow you. That is an error that can affect the rest of your life. We've heard of some people, some young people, that they'll leave a job and they cash out their 401k. Well, that's a big error. That's there for their future. That is not checking account money.
No.
So that is probably the biggest error that we see in finance, and it has lasting effects.
Yeah, and it goes down to being diversified. You cannot have all of your money in retirement funds, especially when you're in your 30s and 40s and early 50s. You have to have an emergency fund and non-retirement assets to withdraw from,
Right.
so that you don't blow up your entire plan when a big expense comes up.
So true.
Yeah.
Yeah. What's another error that we see? So that is the biggest error, but there are quite a few. And people do make mistakes. And one of the reasons to have a financial advisor is for that financial advisor to talk you out of those mistakes.
Yeah.
Just like a manager, can help a player with errors. We laugh sometimes players don't make errors because they don't go after the ball. Dropping that ball is an error.
Yeah.
So that manager is there to guide the players, of course, and to coach them. We as financial advisors are here to guide people to not make errors that's going to affect their future.
Yeah, and if errors do happen, to help them get back on track. Inevitably, some things will go wrong throughout their life, but we need to steer them back on the course and hopefully rectify that error so it doesn't keep happening.
Do people tend to make mistakes with their investments in the market when the market is down?
Yeah, I would say so, especially when they're investing on their own, and it's very emotion driven when you're doing it yourself. It tends to have a little bit more logic when you have an advisor, a third party involved in the plan. But a huge error when you're investing in the market is selling or making drastic changes to your plan when the market's down. And I'll give everyone an example of this because it's something that I've seen actually happen recently, and I was able to correct it before it happened because it was a client of mine. And about a year ago, this client, we did his risk profile questionnaire and he scored as an aggressive investor. We spoke about his goals being very aggressive growth. This was money he didn't plan on touching for at least 10 years. And so that was how the portfolio was designed. It was pretty aggressive. About 2 months after the account was opened, the market experienced a bit of a dip. Not a recession, not even a correction, just it had a couple down weeks. And the client panicked. I got a couple panicked phone calls. Oh my gosh, I'm losing the gains that I just earned. Is my principal going to start losing? I can't take it anymore. I don't want to be aggressive anymore. And we sat down and we had a conversation that this is part of being invested. You're going to have down weeks. And if we sold when the market was down and we moved into a very conservative strategy 2 months into the account being open, the problem would be then when the market does recover, which it did, he would not have reaped those gains because he would be on the sidelines realizing that loss. And so he left it alone. He stayed patient. And within about 2 months, his account recovered the loss and has since earned a lot. It's actually up a lot right now, only several months later. But we had to stay patient and we had to have that conversation.
Very similar to when players, batters, go into a slump.
Yeah.
Teams go into losing streaks. Do we just, fire that player because they're not batting? No, you ride it out, you work through it, and then you improve upon whatever that situation may be. If you needed to make some tweaks to that client's portfolio for the future, fine, but you don't want to panic. Just like players are going to go through streaks, hot streaks, slumps, and we have to stay consistent. We have to stay patient and stay with them.
Yeah, imagine if every great player quit when they were in a slump. So many amazing things that have happened wouldn't have happened.
Right.
Because they wouldn't have been playing anymore.
Right.
So,
Yeah,
it really is about having that patience and then having the lines of communication open. Just as players do with their coaches, our clients should with us.
Yeah.
What's one more error that you've seen?
A very high credit card balance with incredibly high interest rates. We hear about this more often than I could ever imagine. So I know that we've had this conversation. If you can't afford something, don't buy it. If it's a necessity and you need a new refrigerator, well, of course, you're going to put that on your credit card. Please pay that off as soon as possible because those bills, those minimum balance payments will get you nowhere. We see that quite often with mostly young people. They have those high balances and they can't seem to dig themselves out of that hole. So then, you know what they do? They dip into their investments.
Yeah.
Even if it's
Double
retirement investments, they will dip into that. And, it becomes like a mouse on a wheel. I have to pay it, and then I have to borrow. And it's not a good thing. So be very aware of that kind of error. It can be devastating.
Yep. Credit cards are really only good for the points and the miles, but if you cannot pay off the full balance at the end of the month, not a good idea.
Right.
All right, so we will move on from errors, although I'm sure there's plenty more that we could talk about. We want to keep this positive and uplifting. So talk to me a little bit about bullpen management.
Okay, so the bullpen. The bullpen is that staff of pitchers. And that staff of pitchers, they pretty much guide the game. Now you have your starting pitcher, who is your ace, and that starting pitcher is super aggressive. Usually, fastballs. They are along the same lines of starting your financial career, your financial future. You want to be aggressive in the beginning. You want those strong returns. You want that super exciting kind of portfolio. And so we have that starting pitcher in for X amount of innings, similar to X amount of years in your financial future. And we hope to get the most out of that starting pitcher. Usually we do, because that player truly guides the game. Now, in the middle of the game, we'll have our relievers, our relief pitchers. Picture yourself in your middle of your life type thing, and you have some investments that are pretty much solid, that are pretty safe, that will guide you to the next phase. That's the reliever's job. Let's guide that team, that player, to the next phase. All right. So we want consistency out of those relievers. We want stability. Okay. We've already gone through the aggressive and the real competitive part. And now we want some stability. And then comes the closer. The closer's job is so important. Those closers need to be precise. They need to be on target. They need to be dependable. And the closing period of our financial life should be dependable, reliable, predictable.
Mm-hmm.
That closing period, just like that closing pitcher, needs to really finish and do the job right.
Mm-hmm.
And I love, when we talk about pitchers, they are so different. And your financial life should be so different.
Mm-hmm.
The beginning of the game, the middle of the game, and then that end of that game really should have 3 different segments, just the same way as a game does.
Yeah, I mean, that's such a brilliant analogy because it's so true. The accumulation phase is going to be different than that distribution phase. And the closer or the closing investment should be protecting what you've built, either throughout
their
the game
job.
or throughout your financial life. We don't want to lose what we've spent the whole game doing or what we've spent our whole life earning. We have to protect it. And so those strategies have to change over time. And sometimes your advisor or those mutual funds that you relied on for the accumulation phase of your life might have to be different, probably should be different. Not necessarily the advisor, but the strategy should be different once you're in that distribution phase and you need to protect what you truly have built.
You need to close out that game the way you intended.
So true.
Yep.
Now, we'd be remiss if we did not address the umpire of baseball, and I like to compare the umpire to the IRS. We might not always like their calls, but we do have to play by the rules. Good financial planning is knowing the IRS rules and regulations. And just like in the game, you have to throw in the strike zone. You have to play by the rules. And so that is part of our job, is informing the client of what tax advantaged accounts they can use, how they can save on taxes, how they can plan for distributions from their account, when to time those distributions, and just the strategy around it, of course, has to be in the lines of the IRS guidelines.
That's right.
We have to stick to it. Just the way a pitcher can throw however he wants, but if he's not in the strike zone, it's not going to do his team any good.
That's right. One of the fairly new rules for a regular season game is that ghost runner. Now, the ghost runner is when you go into extra innings and your team is allowed to put a player on second base. And I kind of think about that when you were a kid and you were going to have a race and one of the other kids said to you, "I'll give you a head start." And you're like, "Okay, sure." So we have this ghost runner on second base. And I am really comparing that to some of our investments that we have available right now give you a bonus. They give you a head start. I like to call it a jump start. Just the way that runner is on second, you can open up an investment and get a head start with a cash bonus that really will give you a leg up. It'll really give you a jump start to your future.
Way better chance to win.
Ghost
when
runner.
You have that jump start. That's
Yeah.
awesome.
Yeah.
Everyone loves a bonus. That
Sure.
is
Sure.
always fun to have as part of the plan.
Yeah. People will say, "Wait, I get to get extra cash by investing in this particular product, by signing my name. I will get cash." Yes, you will.
Pretty sweet.
Yeah. And that ghost runner gives you the jump start on second base.
Yeah. So, I mean, of course, there's probably hundreds of other phrases that we can go through, and this might even warrant a part 2, and I'm sure we can continue our sports series. But to close this out, Lisa, what would you say the ultimate play in baseball is?
The ultimate play, in my opinion, will be the grand slam. I mean, how exciting. If you've ever been in the stadium and have witnessed a grand slam, it's so cool. It's so exciting. It's it's iconic, and it's not, it doesn't happen that often. And those players that get a chance to hit those grand slams and the people that get a chance to watch it, it is so cool to see. And I want to compare that to a complete diversified portfolio. And if you have the right manager, and if you make the right moves, you can hit that grand slam in life. You can hit that grand slam in your financial world, and you can live that life that you intended to live. You know, that grand slam hitter that's running around those bases has got to feel so good, you know, that he was able to do that. We want our clients to feel so good that they are able to have that retirement. You know, this is all about the future. Investing right now is great for you know, if you want vacations and if you want to spend, you know, more freely, but it's all really about the future. We want to have that kind of feeling that a grand slam hitter will feel.
Yeah, and I think a lot of our clients have felt that grand slam as they're leaving legacies to their grandchildren, and as they're taking those cruises around the world and getting to live out the things that we spoke about doing for the last 10 years.
We have
That
a
is
lot
the
of
grand
people now that are a few years into retirement, you know, well into retirement or just retired. And it's wonderful to hear them say, we're fine. We just came back from that cruise, and you know, we want to take another one. And everything is, because it's our job to ask about, you know, well, how are your finances going with your bills? You know, is there anything? No, we're all good.
Yeah,
We're good.
it's a true pleasure. Well, you know, baseball, it really is a long-term strategy, and so is financial planning. You don't need to have the flashiest team. You just need to have the one that shows up consistently and plays that long game. And so if you have specific questions you would like answered, or you'd like to hire us as your financial manager, feel free to go to our website, union-financial.com, and click schedule a meeting, where you can book a time to have a phone call, Zoom call, or in-person meeting with Lisa or myself. And if you know someone that loves baseball and stresses about money, we'd love if you could share this episode with them. It really does help us. And Lisa, thank you so much for coming on another episode.
Fun. It was fun. I mean, like I said, we want to just keep people's interest.
Yeah.
And sports, there's a lot of sports fans out there.
You're always a wealth of knowledge with sports and money.
Sports, yeah.
Now, thank you all for tuning in to another episode of the Future of Finance podcast. I'm your host, Marissa Wood, and we look forward to helping you live a better financial future. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Union Financial Services are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. The opinions expressed by Marissa Wood and guests on this show are their own and do not reflect the opinions of this radio station. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risk and otherwise stated are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor to determine if it's suitable for your specific situation. This program is designed to provide accurate and authoritative information with regard to subject covered. Index or fixed index annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charge as described in the annuity contract. Guarantees are backed by the financial strength and claims paying ability of the insurer. Please refer to our firm brochure, the ADV 2A Item 4, for additional information. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone.